Welcome back to the Financial Knowledge Group. Today we look at what makes Nvidia so dominant. Nvidia is blowing away the competition and making it look easy in doing so. From gaming GPU maker to trillion-dollar AI juggernaut. But how did it get here, and where's the money really going? Nvidia has become synonymous with artificial intelligence, and for good reason. In 2025, it's not just a chip maker anymore, it's the foundation upon which the global AI industry is being built. Over the past 5 years, Nvidia transitioned from a high-performance graphics card company for gamers and creatives into the most critical provider of hardware for machine learning, deep learning, and generative AI workloads. Their H100 and O100 chips, and now the newly launched Blackwell series, have become standard equipment for data centers and cloud providers that power large language models. Whether it's OpenAI's GPT-5, Google's Gemini, Meta's Llama, or countless private enterprise models, chances are they're all running on Nvidia hardware. What makes Nvidia so dominant? It's not just raw performance. It's the software ecosystem, like CUDA, CUDNN, and TensorRT, that developers rely on to train and optimize their AI models. No other hardware company has built a software layer this indispensable. In 2025, Nvidia also re-entered the Chinese market in a big way. Despite US export controls, the company secured approval to sell its scaled-back H20 chips to Chinese data centers, unlocking billions in previously untapped demand. Some analysts now project Nvidia's total addressable market could support a $5 trillion market cap by the end of the decade. But Nvidia isn't stopping at chips. CEO Jensen Huang announced in January 2025 their plan to launch iFactories, complete turnkey AI infrastructure solutions that combine Nvidia GPUs, networking gear, and software ready to deploy out of the box. These AI factories are tailored for industries like automotive, healthcare, logistics, and even national security. The gross margins, by the way, now rival SaaS companies, hovering around 78%. This is unheard of for a hardware firm. It tells us one thing: Nvidia isn't just selling silicon. They're selling strategic, irreplaceable infrastructure. In many ways, Nvidia is to AI what Intel was to the personal computer revolution, or what AWS became for the cloud. Except this time, the runway might be even longer, as long as artificial intelligence demands more compute, more memory, and more speed. Nvidia stands to remain the biggest beneficiary of this megatrend. For long-term investors and technologists alike, it's a company to study very, very closely. As shown by Nvidia's streams of income, they are looking like a real chip powerhouse. But with the AI market and chip production, it's always important to stay in touch with the news and the changing dynamics of the industry. AI isn't risk-free. Valuations are stretched in many names. Regulation is coming fast. The EU AI Act, China's algorithm restrictions, and growing US calls for oversight could slow deployment. Hardware supply chains remain fragile. Chip bans on China and raw material shortages, like rare earths, could choke production. Interest rates matter. If borrowing costs stay high, smaller AI firms may struggle to raise capital. That's why it's critical to hedge. Hold some short-term bonds. Keep 5 to 10% cash for dips. Don't over-leverage your AI exposure. If you invest wisely across infrastructure, platforms, and applications, you can position yourself for massive upside over the next 3 to 10 years. But do it with a plan. Tune out the hype. Stay diversified. Invest in cycles, not headlines. Formulate strategies like these based on your risk appetite and stick to your formulas to achieve your investment goals. Thank you for watching, and as always, like, comment, and subscribe. See you next time.